today we have one of the senior ogas in the industry, right? I'm pretty sure most of you already know him because he has paid his dues. You definitely need, if you don't know him, go and check out his LinkedIn. You need to know him. He's not, you know, he has paid his dues. So when we say that somebody is a senior man in the ecosystem, this is what we are talking about, right? So do check him out. So Loknan is one of the OGs in the fintech ecosystem. If you don't know him, I'm sorry, who do you know? Yes. Um, you probably already know him, but let me give you a brief intro, right, before I hand off to him. So Loknan has over 15 years of experience. 15 years is not small, 15 years in the tech industry, and he has built multiple products, right? Multiple products. The products that you use today, trust me, he's behind it. The companies that you interact with, it's probably behind it, so you don't know. He has his hands everywhere. But yeah, so he currently works at Paystack. I think everybody here knows Paystack or have used their products at one point or another. So Paystack is one of the biggest companies in Nigeria and Africa, right? So Loknan leads the infrastructure and security team at Paystack. So if you use Paystack, just know that he's one of the people keeping things running behind the scenes, right? So yes, let's appreciate him. So he is also responsible for their IT services, cloud infrastructure, observability. So everything, about Paystack payments, right? Everything. He's the one keeping it running. He's the one making sure that you are not having transaction failures. He's the one making sure that everything works smoothly. So I don't need to talk too much, right? To be the head of infrastructure at Paystack, you know that, yes, it's not a small thing. So today he's going to be teaching us how to build resilient payment infrastructure, right? So if you're building payment products, you need to pay attention to this one. So Loknan, over to you. I'm handing over to you. Help us understand what it means to build resilient payment infrastructure. Thank
Uh,
you.
yeah, thank you. Hi everyone. Good to be here. Um, so yeah, I think she did the introduction much better than I would have. But as she said, my name is Loknan. Um, I am Nigerian, if some of you are asking. I'm from Plateau State, Jos, and I have been working in Paystack since 2016. I joined as the first engineer here. So built a ton of the applications, built a ton of the platforms, and now lead infrastructure and security, where I support four teams, as Betty had already mentioned. So I'm just going to be going through. I cannot do justice to what building resilient payment infrastructure looks like in 1 hour. This is years of work and years of tweaking, years of tuning, years of, you know, doing very different things. Awal, how are you doing? Um, Awal is a GDG person. Yet I used to be a co-organizer of the Lagos Google Developer Group as well. So yeah, I was part of the community a lot back then. But yeah, just to go in quickly, this is going to be a technical conversation. I have some highlights here. I have some points I'm going to try to um, pass across, and I'll appreciate questions. So please, if you have questions, just put them down. We'll collect the questions, and I would like to, because there are a wide variety of people here, and different people have different things they are building across the payment and fintech space. So there is no one size fits all for everyone. Your infrastructure, um, um, your technical infrastructure, your product infrastructure, and a bunch of different things. Your security compliance will be should be targeted as a case by case basis most of the time. I'm just going to give you the general considerations for you to take, and then you can, talk to your team or talk to some consultants to get the actual details of how you implement in your own infrastructure. But a lot of what I'm going to say here actually cuts across, and not just cutting across payments infrastructure alone or fintech applications, but it also cuts across builders that are building applications generally, because I think there are some common sense um, architecture principles that we need to apply when building applications, not just fintech. Fintech, yes, is highly regulated, and there are a lot of eyes, a lot of governments, a lot of regulators and stakeholders keeping an eye on trying to make sure things work well. But yeah, when we're building, let us build resilient systems. Let us build resilient, social networks. Let us build resilient inventory systems. Let's build resilient hotel platforms. Let's build resilient food delivery systems. Not just payment infrastructure. But the topic for today is payment infrastructure, and I'm going to share my screen to start immediately. Um, yeah, so I'm gonna jump right in. Um, so just give me a second. Let me share my screen. Yeah. I want to believe you all can see my screen, right?
Yes, we can.
All right, great. All right. So we'll just move on quickly. What does building resilient payment infrastructure, balancing performance and scale? What does it really mean? Um, when you're building your application, you want your application to perform. You want your application to hit not just the 100 users, not just friends and family that are using it from day one, but you want it to scale to thousands, tens of thousands, hundreds of thousands, possibly millions of people. And you want it to perform while scaling. Right now, it's very easy when you're building for 10, when you're building for 15, when you're building for yourself and your co-founders to see everything working very, very well. Sub-second speeds, some sub-second latency and all that kind of stuff. And you're excited. But you quickly realize that that is not the whole truth. That is not the end all of your building experience. You are going to run into very, very interesting situations. I won't call them problems, but they start in the form of, I think, a trilemma, and I think this might be an easy way to think about it. So what you're trying to balance speed, you're trying to balance skill, and you're trying to balance safety. Or someone can say, performance, resilience, and scalability. The core or the sweet spot is usually right there in the middle, where you have elements of all three in your application and in your platform. And this balance is what I think I've been working on for the last 9 years and some months at Paystack. And yeah, it's still something that we're working on because it continues to evolve. And every startup or every fintech that is hitting scale in any way, shape, or form will tell you that these are the things that they're also trying to balance, right? So when we talk about performance, we're talking about speed. We're talking about low latency. We're talking about high throughput. We're talking about the ability for your application to be able to handle more um, uh, customers, handle more requests while maintaining low latency and while being very, very fast. Most of the time, people think this is just about the technology you use, so whether I use a Go or whether I use a Node.js or whatever it is. And sometimes yes, and sometimes no. That's not the end of, like, the language you use or the platform you use to build these systems isn't all there is to it. There's a lot more that goes into handling speed, low latency, and high throughput. When you think of resilience, you think of your uptime, you think of your availability, you think of your data integrity, security, compliance. These are things that, begin to rear their heads as you build and as you scale. You find that a lot of stakeholders really pay a ton of attention on this resilience area. You will have regulators. You guys are all building for fintech. You will all have regulators. Whether you have them knocking on your doors now, just know that that is a constant in whatever market you operate in. Whether you're in Nigeria, whether you're going to Ghana, whether you're expanding across 54 countries in Africa or even internationally, there will be regulators. There will be people that want to care or want to ask about your compliance, your posture, your security posture, what is your uptime, what is your quality of service. There will be merchants, big merchants that you want to onboard to use your service. Enterprise merchants that care a lot about these things because they also have SLAs for their customers, and they will hold you, they'll hold your feet to fire to ensure that you're meeting these requirements, the requirements, basic requirements of security, basic requirements of compliance, basic requirements of uptime and data integrity, basic requirements of availability. They will hold your feet to fire. So these are things that you also have to consider when you are building financial technology solutions or companies. Scalability, you need to also handle you need to also grow. You need to also move from 100 requests per second, 100 requests per minute to probably 100 requests per second or 5,000 requests per minute, right? Like, what does that look like? And it's a lot of balancing. It's a lot of really um, taking a deep look, taking a step back and re-architecting, thinking about things from first principles, right? What are the core areas of your application? What are the core areas that you want to, that you are noticing have certain types of friction? And what are the things, what are the investments, technology investments that you can make to those areas to improve your ability to handle both performance and resilience, and handle your ability to take care of way more requests, or to respond to way more requests, or to respond to way more customers than you previously were able to. So those are things that you are going to have to deal with. These are the core challenges of of building the fintech. Now, I think the way I want to structure the chat, which I will call it, is just deconstructing what the payment flow might look like for those of us that are not familiar. I know a lot of us are familiar with this, so I'm not going to spend a lot of time going through payment flow. We're going to talk about, what does architecting for resilience look like, performance and scaling, and some lessons that I've experienced myself. And then we just conclude. So hopefully this would just give us a summary. And like I said, each of these topics alone could take the entire hour if we were to deconstruct properly, right? So the work is, I think, hopefully, if I achieve anything in this conversation, it is to tickle that interest, and help you all to understand just a little bit, the tip of the iceberg. And then you can go and tackle some of those problems yourself. But you will tackle the problems not being, knowing a little bit more from what some of the companies that have gone ahead of you have done, right? So that's my work here. And I also please ask your questions. There are nuances in your different applications. So I want to leave enough time to be able to tackle as much as I possibly can some of the questions that you will have as you build. All right. The payment flow, simple anatomy in the transaction, really. There's nothing, it's nothing really complicated. But what I would like to highlight is that from the time you click the pay button on Paystack or Dropaway or whatever, you are interacting with a bunch of different systems. This is a high level view of what it could look like. Where the customer, which is you click pay on a merchant, say you're paying for your internet or you're paying for um, lunch or whatever it is. Your request goes through a payment gateway being Paystack or any other companies that you know. The payment gateway, sends a request for approval to your acquirer. The acquirer is to the acquirer. The acquirer is a bank at the back end that kind of like supports the payment gateway that you're using. And I'm trying to use apologies for that. I'm trying to use very high level views. So hopefully when we get into the details, and you can ask questions, and give you more details without violating any NDAs for my company. But anyway, so the payment gateway sends it, through the acquirer. approves or declines the transaction. The transaction goes to the card network, and the card network usually being, your Visas, your Mastercards, your American Express, etc., Verve, and they will send a message to the customer's bank. The customer's bank is basically the one that issued the card, and the customer's bank would approve or decline money or funds being deducted from that account. In a high level, this is how the payment happens. So at the very least, there are six different parties, sometimes more, but at the very least, there are six parties that are involved in a single transaction. So think about it, right? Like you go to paystack.com and you click, or you go to, in myinternet.com and you want to pay for your internet and you click pay for internet, which is 80,000 naira. Once you click pay for internet, it goes through all these steps. Sometimes it goes through more steps, and I'll explain why as we go forward. But at the very basic level, these are the steps that it goes through to be able to get a transaction done. So it's more than a single API call. John, who is a customer that wants to buy books from Latana, who is a merchant, which uses Paystack as a gateway. Paystack works with Access Bank, which is an acquirer. So Paystack's, the bank that Paystack is establishing a contract with is, in this case, for example's sake, Access Bank. Access Bank routes the transactions to the card network, which we saw in our diagram. The card network, whether it's Visa, MasterCard, or Amex, sends a message to, John's bank. John is a customer. And basically the message that is being sent is, oh, John wants to pay for this particular thing. And then, there are a bunch of other parameters that are sent along with that transaction. And then the bank will say, oh, we approve or we decline, and your transaction response. So it goes back the chain and your transaction response is sent to you. So from the customer to the merchant, to the gateway, to the acquirer, to the card network, and then to the issuer. And then the response goes back the same way down to you. Now, all these, when a payment gateway is doing transactions in what, sub 1 second or 1 second, all these steps happen. So when you click your pay and you are paying, now take note, if you are clicking pay and you're typing your card details, you haven't actually started the transaction, right? From when you click pay with your card details and everything filled in, when you click that pay, that is when the transaction is sent off for processing, right? And some gateways or some companies have been able to do this at scale and with very, very low latencies, with also very high success rates. And this is a lot of work in the back office that is being done to ensure that all our payments are moving on smoothly. It's fascinating to know that, with in the financial technology space, and I'm proud to be part of the financial technology. I'm proud to be in that space because there is a lot of impact that has been done or a lot of impact has been made in the last 10 years. Seeing that in 2015, uh, uh, the numbers, I can't remember the numbers clearly right now, but uh, we did not process a quarter of what we are processing right now in Nigeria in the financial space. And correct me if I'm wrong, but this is subject to verification. So about 140 billion that we were doing as part of web-based transactions back then in 2015, thereabouts, according to CBN's website, if I remember correctly. But today, in Nigeria, with the combination of the various fintech platforms and the various fintech gateways that we have, not just Paystack, we're talking Flutter, we're talking everyone. We are doing way more than $1 billion a month in terms of processing. Now $1 billion, I'm not talking about $1 billion naira. Billionaire is not something to celebrate anymore, right? So the amount of money movement in the country has it has 100x, if not more, right? And that is good because a lot of the companies, the pay stacks that started back then, I see them as building bridges for companies like, the Piggyvest, the Chowdeck, and the Cowrywise, and the many more companies to be able to start accepting funds. I mean, it has opened the doors and opened opportunities for all of us here to be able to have this conversation, to be honest. For all of us to think about more innovative ideas around collections and disbursements. And I think it's an immense opportunity that we all have. So yeah, to build on the things that we've build on the knowledge that exists in the ecosystem. And let's develop this place a little bit more. All right. Common risks and failure points in the flow. So the flow that we talked about, it's not, it's not, it's easy to talk about the flow and the six different parties, the customer, the issuer, the acquirer, etc., all that. But it is a lot more difficult in reality. And the reason why is because every single node, every single hop you have in that payment flow or in that entire flow of a single transaction gives multiple opportunities for failure. And if there's anything that I learned quickly while working at Paystack, while building at Paystack, is that you don't build, especially in this environment, especially when it has to do with people's money, you don't build for success, you build for failures. And what does that mean? You build to respond to failures. You build to respond to things that go not as you expect. And this should be common knowledge, right? But you find that there are many engineers, many people building that sometimes take this for granted, right? Like we assume that when you make a call to, say, gateway A, you are going to get a a predictable or finite outcome or finite response. And what I mean by that is sometimes, oops, pardon me, my hand is playing with my keyboard here. What I mean sometimes is when you initiate a call to, say, a banking partner or to another processing partner or to another gateway, there are a bunch of variables between when you make that call, when your system makes that call, to when you get your response back. The common ones, would be API gateway timeouts, where because of their own load, they are not able to respond to you properly. So the request times out. And when it times out, it leaves you in a state of your system does not know what went wrong. By default, you will want to say it failed, right? That's how you would assume. But a lot of what you don't know is they probably received the request, are processing the request, and then the request is taking a little bit of time to be processed, or they put it on a queue and your own connection to their server just got disconnected, right? So how do you handle situations like that? How do you handle errors in configurations, right? We've seen situations where you are trying to reach out to a particular partner, but a misconfiguration on one of the systems has led to certain types of problems with your transactions, with a bunch of transactions. Um, how do you handle downtimes when, in that chain, your own acquirer is down? How do you handle that type of problem, right? Like you need to respond to people's requests to buy, whether it's food or whether it's books or whether it's internet, right? People are trying to pay. How do you respond to downtimes that are essentially not your downtimes from partners, right? Those are things that you will quickly learn that you have to deal with, you have to build into your system. How do you respond to fraud rules that may not be favorable to you and your success rates, right? What does that look like? What does partnership conversations look like between yourself and your various partners, to ensure that you are getting success, higher success rates as you build? Because in the world of fintech and if anything I've seen, your success rates determine a lot. They determine if people will partner with you. They'll determine if people will use you. They'll determine if people are even willing to put their cards, to make a payment if they see that the payment is being powered by you. What about network latency? What about network isolation, network partitions, right? Like what happens when the network itself is causing issues? Now, this is not just you, this is not your partner, but there's a connectivity issue between yourself and your partner. These are things that you have to deal with, right? Then what happens when your switch goes down? What happens when your card networks go down? What do you do? Do you fall back gracefully? Do you have a backup? Do you have what do you do? How do you respond to the customer that is waiting for, a transaction success or failure, right? Now, these are things that while building, and again, these are more general things. They're more general themes because your various applications or various pieces of software will vary, but you will find that these things are common across your applications or the issues that you are dealing with. And of course, reconciliation, where you are making money, you're trying to, you're making money, you're making payments, whether you are paying on behalf of people, whether you are doing things like aggregating payments or whatever it is, right? Doing the back office work of making sure that, say, a Banji is able to get exactly, and Banji is a merchant here, but Banji is able to get exactly the amount of money that he is owed by your gateway, right? Or making sure you as a payment provider, making sure that you are getting the exact amount of money that you're meant to be getting from your acquirer at the end of the settlement, right? So all those people like in that chain have something to say when it comes to your reconciliation journey or reconciliation story. So how do you handle things like that? The key takeaway from all this is you are going to be building a ton of things, a ton of controls, a ton of protections for your system. Protecting against API gateways and gateway timeouts, protecting against configuration errors, downtimes, aggressive fraud rules, network latency, or even reconciliation issues, right? But the takeaway is that your weakest link, could be your own, your downfall. Your system is only as strong as your weakest link, right? So you need to think about those design decisions and you think about the architecture and you think about what you're building very, very well. And I think, in startup world, it's usually move fast, etc. But I think it is more, you know, learn fast. Learn fast because it's people's money that you're dealing with, and there's a responsibility for us builders to take care of the funds that people have put in our hands, right? It's no joke. Someone typing their card details and asking you to or perform a transaction on their behalf. That is a responsibility, and you need to make sure, as much as possible, you cater to some of these concerns or common risks. You will find them. I'm not here to paint rosy pictures. You will find these risks. But I'm here to tell you that some people have figured them out and you can also figure them out, right? All right. So, what does it mean to build for failure? Like I rightly said, um, you can think of it as, having a mindset that things will fail. When you make a request, when I'm making a request from my system to another party, whatever the party is, whatever the third party service provider is, the assumption that you should have at the back of your mind is that, look, it can fail. And when it fails, what do you do? Right? So there are redundancies that you can put in. So how can you have multiple providers or acquirers to ensure that when one goes down, you can fail over automatically within the same transaction lifecycle or critical path? How can you make sure that you're able to fall back very, very quickly? What happens when one of your dependencies is down as well? Can you offer alternate payment methods? So if you have a payment channel, now this is not your acquirer, but a payment channel that you offer for payments, and that channel is down, how can you ensure that people are still able to pay on your platform? Do you offer graceful fallbacks? Do you assist people to, like, do you kind of like hold their hands when there's a payment failure? Or you can use X or you can use Y. Those sort of things go a long way in the usability of your application. Are you able to build an infrastructure at your back office to detect automatically when your partners are unreliable and then automatically switch? These are things that you need to be thinking about. Are you able to build, things like, bulkheads so that when there are failures and one part of your system, it does not affect other parts of the system and people can gracefully use the other parts to successful transactions? Those are things that I feel, you know, help make your application a lot more resilient. And then, of course, idempotency is not something that we should leave out. Um, if the same transaction were to happen, say on John's card, so John that was trying to buy books, if he mistakenly clicked twice, or even if he clicked once and the transaction went through, and you're acquired. Remember, I said that sometimes the fault is not even yours, and there's a timeout, and you don't know, and your system retries that same transaction. And do you have things like keys? Do you have references that you can use to check? Do you have signatures that would ensure that that transaction is not performed, twice? Now, there's a world where um, John clicks the button twice. You need to take care of that. There's a world where your system generates your client at the front end, your front end client generates two different actions. So the on-click event maybe misfires and it fires twice instead of once. That you need to take care of that. There's a world where your backend system sends one request to a partner, maybe as a result of a gateway timeout, maybe as a result of an error. Your system assumes that it failed, so your system tries to retries it, right? How do you take care of that? What if it had actually gone through, right? So idempotency is something that you need to, build into your application to just make it a little bit more resilient. Really, these are things that you need to cater to in the world of fintech that we are building. Um, Now, when we're talking about balancing performance and security, I have this I really love this image, where I think we see that performance is down and security compliance is a little bit up, but really it's a balancing act, right? Because you need to, at every single point in time, manage um, the balance between, performance, security, and compliance. Security is not an afterthought. Compliance isn't an afterthought. These are things that should be built into your application. And some will say build it from day one. I would say build common sense security primitives from day one. What common sense security primitives look like, that's a totally different topic. But you need to be aware that there's a world where you have to build a secure system. You have to build a compliance system, right? Um, you need to talk about if you're doing card transactions, you need to talk about PCI DSS. If you're making payments, you need to talk about PCI DSS. If you are handling card data, and you assume that, okay, I'm not a gateway, I'm not processing this data, but I'm tokenizing the data. The question you should ask yourself is, you know, should you be tokenizing the data in the first place, or just hand it over to those that are more capable of doing that, meaning the payment gateways, right? Because if you're not directly processing yourself, if you're not a payment gateway, then should you be keeping sensitive data, card data, etc., right? Those are things that you need to consider. You need to consider other controls, defense in-depth controls. We're talking about web application firewalls. We're talking about network firewalls. We're talking about internal access controls. We're talking about cleaning up your excess data, right? Your data integrity. You're talking about data privacy. We're talking about responsible use of data internally, and all that kind of stuff. These are things that you need to really think about. Security, I don't think it's I don't think some people think security is a bolt on. Okay, you build first and then you add security. It is a feature, but it isn't just a feature, right? It's found in our world today. It has become more foundational to how you're building. So maybe it's not even, we're talking about product feature one, product feature two, product feature three, security. No, don't think about it in that sense. How do you build your security primitives right from day one, right from when you are building? What does security look like for you in day one? And how would it look like for you in day, say, 100, right? How will security look in when you have 5 users, and how does security need to look when you have 10,000 businesses using your platform, right? And what would it look like when you have 100,000 businesses using your platform as well? These are considerations, and it's not, some would come and tell you be compliant or be certified in XYZ from day one. I don't subscribe to that, but I feel there are controls that you can put in at every single stage. And knowing those controls is the work of the builders, right? Knowing what probably good algorithms for password encryption, for instance, look like, right? Those sort of things. I'm not going to go into the details of security here right now, but those are things that you should consider, because from day one, people are going to log in. So, how can you make it a bit stronger? How can you make it a little bit more secure? And that's it. That's the consideration you should have. So always managing, I want to managing the performance, saying I want to be able to have very fast APIs. I want to be able to have very low latency. I want to be able to have very high throughput. While also saying, how can I make my system secure? How can I make my system compliant? Because either of them or both of them are actually important, and either of them can really cause damage to your reputation and your business, right? So those are things that I think you need to consider very, very strongly. Building for growth. Of course, everyone wants to grow. Like I've mentioned many times here, you're going to have like 100 people using your transactions. You're going to have using your systems. You're going to have 100 transactions, and you're going to have 10 million transactions, right? And that's what we're hoping for. We all want to, you know, I think these are good problems. We all want to have good problems. Good problems is, how can I deal with, 1 billion users a month, right? Those sort of problems, right? These are things that you will all want to have. I know I want to have it. But how do you build? How do you handle um, um, growth? How do you build for scalability? Now, the honest truth is, there's a whole talk, and there are sessions. I think I had a talk a couple of years back, simply on this particular topic, scalability, which, as simple as it, well, it's not too simple a word, but as simple a word as it is, it tends to be very, very complicated. You need to design services that scaling. You need to use platforms that are able to grow with you. You need to have auto scaling rules in place. You need to have redundant replication in place. You need to have architectures, not just for your applications, but you need to have architectures for your data stores or persistent layers. You need to have different levels of persistence to be able to handle things that you or handle your growth and etc. Then you start applying some concepts. I think some of us here, you're engineers, about locality of reference, right? You need to start applying those concepts as well to be able to help your application as you grow, because the more users, the more performance it would require, the more tweaking you would need on your system. So those are things that you need to start thinking about. You need to think about database bottlenecks. You need to think about, oh, am I having one database? If I have one database for 100 people, am I having one database for 10 million transactions? Am I having a separation between master or readers and writers in my database architecture, right? Those are things that you need to start thinking about. Am I having a master, meaning multiple writers? And what are the design problems with having multiple master? Start thinking about eventual consistency. You need to think about the fact that your data needs to be consistent. As a financial technology company, you need to think about the fact that your source of truth needs to match at every single point in time. So maybe Betty opening her dashboard in Lagos, and Elizabeth, who's a member of our team, opening the dashboard in Jamaica, they need to see exactly the same amount of data, right? So those sort of things are data problems that you will begin to have. So you need to think about the architecture a little bit better. You need to think about, what consistency would look like for you, or is it eventual consistency that you want to apply, or principles that you want to apply? Do you want availability? I don't know, some of you might have heard of CAP theorem and all that kind of stuff. This is where these conversations start to happen when you design or when you build for growth. You also need to think about the fact that I think I made a comment. I need to add it to this slide. I made a comment a few years back where the more people you add to your team, the higher the risk of your platform going down. And that's very, very, very interesting, because like it's the risks of rogue code increases, the risks of misconfiguration increases, the risk of misalignment, and instead of having having maybe 1,000 1,000 as a value amount in Kobo, someone puts 1,000 as a value in, like basically they multiply the amount you're trying to transact or send by 100. It has happened. I've seen it, right? And this was as a result of someone just coming new and not really understanding, so these things happen. How do you cater for them? How do you build knowing that you will grow, not just from a customer perspective, but from your internal team? Your systems will grow, your services will increase, your databases will increase. These sort of things are things that you need to start thinking, you really need to think about. Load testing. Yeah, some of you are not going to experience Black Friday, and some of you will. Those of you that will survive Black Friday, congrats to you. Those of you that probably will not, and I don't mean that in a bad way, my condolences, but these are things that have beaten people multiple times, right? We've seen businesses have tremendous problems Black Friday. Like there are teams I know that sit down and do a Black Friday planning, prep, whatever. In fact, everybody should do that, right? Like you should actually sit, think about what your platform is going to look like, what you expect, because you don't know, but you can project, you can, simulate some data. You can see, what your peak periods might look like. You can see where your system begins to fail. And then you can maybe triple that. And with the platforms that we have nowadays that are more elastic than they are static, you don't need to do all the upfront work, setting up servers manually, etc. I know most of us here haven't done that. But it's really a click of a button. It's really one configuration. It's really a few um, uh, things or heuristics or configs, so to say, that would help your system spin up 10 more services or 10 more servers to handle the load. So those are things that you need to consider. You need to test your system. You need to know and understand how your system is behaving. These are the things that would help you scale. But yeah, I'm spending a lot of time on this. I'll just go through some of the lessons that I've had, and then we can tackle some of the questions. I saw some questions coming in, and I'm really, really eager about the questions because they would give me more ammunition to be able to help you guys as much as possible. Um, aha, unreliable last mile. I want to see maybe when we talk about the lessons, those of you that have experienced this before, maybe you could just simplify so that I know that I'm not alone. So at least I know I'm not doing something wrong, because these are things that I have experienced personally. So the unreliable last mile is basically when when transactions succeed on your system, but value is not given to the customer. We've seen that happen multiple ways and multiple situations across multiple different payment channels and in multiple different jurisdictions, right? It's funny and a lot of people here are laughing, but it is a thing, right? It's a thing. And I don't know how to solve the problem because the problem can happen come as a result of your system. It could be a result of your acquirer. It could be as a result of your the issuing bank or the card network. It could be a ton of things causing this particular problem. But the idea is if you look at the principles that we've applied, build robust systems, implement idempotency, um, build with failure in mind, right? And then you begin to catch some of these things a little bit earlier, and then you're able to monitor, you're able to see your system, right? Because if you don't have, for people that are building financial technology solutions, interacting with what Nigeria is 200 or something million, it's not 300 now. Um, if we're interacting with a subset of those people, so you're interacting with people in Lagos alone, which is like 20 million, right? Failures can have very devastating effects on your customers, right? And I think we owe our customers the ability to be able to equip ourselves to monitor, to be able to know, to be able to observe what is going on in our systems. So it is key that we are able to see, to be able to detect problems, and to be able to fall or fail fast and recover even faster, right? Those are things that I think we should be able to do very, very well. It has happened. A transaction has succeeded. What is the root cause? Why was the value not given? You can reconcile quickly. You can resolve that problem quickly. You can do a hot fix and patch the problem quickly. You can turn off a gateway that is misbehaving, right? Those are things that you can totally do as you build your application. But of course, don't turn off your application. Don't take yourself offline. I don't think it is that deep, but don't take yourself offline. You should have fallbacks, um, so that you can continue to make money and buy your G-Wagons. All right. Fragmentation challenge. Um, Integrating a ton of providers. Those of you that have gone through this, and each of them. Now, the funny thing is, I think in this example, it's more, say, M-Pesa, USSD, bank transfer cards. They're all different payment channels. There are sometimes that, yeah, we can understand that, oh, M-Pesa, USSD, bank transfer cards can give you different error responses. But there are times that even for cards, depending on the issuer, depending on the acquirer, you will have totally different responses or different failure modes, different errors. I'm not going to name any names, but I have personally experienced with a single provider different error error modes or failure modes. So there is no, what is the definition of a successful or a failed transaction? If a transaction fails now and then tomorrow on their system it's successful, or if a transaction is successful now and you give value, but reconciliation shows that it failed, right? Like, what is the truth, really? So basically, how do you handle that problem? You can try to normalize errors. So we did an exercise back then in 2017 where we created um, the true success rate for our customers by analyzing all the errors in our databases and classifying all the errors in our databases, creating some sort of state machine that would say this or that, or this is how the error looks, or this is what the error is from, or this is your error, this is our error, that kind of thing. If you have a place like dashboard, I think that's the first thing on when you open your dashboard, there's error rates down there. That was implemented a couple of years back. And it was a fun exercise because, yeah, you would see from the same provider, the same error, but two different error messages. And sometimes, if you're unlucky, two different error codes, but the same. So two different error codes, the same message, or sometimes the same error code. One error message is full, the other is has been shortened. Like it's very, very unpredictable, right? So yeah, how do you normalize yourself? How do you balance that? It's something that people are still dealing with till today. I think you can understand the errors. You can try to understand the patterns of errors. You can try to understand. uh, When I was building disbursement service back a couple of years back, I knew certain times when some banks would be unreliable, right? Because of enhanced monitoring. Like I was monitoring and I knew the behaviors of certain banks. So these are things that you can expect, you can anticipate, and yeah, you just build intelligent systems, build systems that would always requery, that would always fall back, that would always confirm the actual state, you know. So yeah, that's kind of thing. It's very tricky. Enough about the fragmentation challenge. I think we're taking a lot of time here. Third party black box. A major bank goes down, causing widespread failures, and their system says all systems, or their status period says all systems operational. So I've given them some credits, and I've said they have status pages. Yeah, a lot of them do, some don't. But if they tell you, oh, everything is fine, or you're calling that person, that engineer, on phone or WhatsApp or whatever it is, and they're like, oh, everything is fine here, but you are seeing problems, so what do you do? Which goes back to some of the principles that we talked about as well. Do you have fallbacks? Do you have efficient fallbacks? Do you have a circuit breaker? Is your system proactively detecting that this particular provider is failing? And, is your system able to move to a different provider or fall back to a different provider? These are things that you need to build. Yeah, it's not rocket science, but it's not ABC as well, right? You have to build these things that would control or that would help your system manage all of these unpredictable behaviors that we have in our environment. And this is not just a Nigeria or Africa problem. There are errors and there are false error codes and false messages across board. I've had the privilege of interacting with startups, even in Silicon Valley and in different places, a bunch of startups that you have heard of, right? And for their own partners, and even sometimes they themselves, right, admit to having poor error responses. One example that comes to mind from even just a few weeks back was, something working on staging and working a different way on production, right? Those sort of things, they do happen. Or something be something breaking actively, and there's no evidence, or you don't see from the status pages, or you don't see from notifications that these things are down, right? How do you make sure that your system remains up? Because that's your own responsibility. You need to make sure your system is resilient, right? I'm not trying to scare anyone. People have figured it out, and you can figure it out as well. That's why we're having this conversation. So please continue building fintech. It's fun. It's challenging, but very, very fun. Um, in conclusion, you need to think about key architectural principles, right? Observe everything, expect failures. I think that's what this is a summary of what I've said. Expect failures, observe everything, automate trust, build systems for reconciliation and settlement. Make sure you have automated systems that are correct, tracking and reconciling in your back office. Um, um, Isolate complexity, remove as much and don't building in fintech is already complex enough, right? Yes, you can use microservices, and you can use good architectures to contain impacts of failures. Or sometimes microservices, and I put here use microservices. Yes, you can, but microservices by itself introduces complexity, right? So yes, the aim is not just to use microservices for microservices' sake, but you are creating clean interfaces for you to be able to observe a little better. And sometimes, right? Maybe what I should have even noted here is that, look, if it doesn't call for it, use your monolith. But just make sure you're using something that you understand, and something that you can work with, and something that will scale with you. I think that for me, that is core. That is, that is core. It's not fancy, but it's core. Um, what to remember as you build? You need to manage trade-offs, right? Yes, your transaction speed, your API errors, your latency, several uptimes are things that we see at the top. But there'll be reconciliation bottlenecks at the bottom. There'll be third-party failures, dependency failures. There'll be fraud risks. There'll be complex fraud rules. There'll be compliance gaps. There'll be late settlements. There'll be insufficient responses from your providers. There will be, mislabeled error codes or confusing error codes or error messages. But all that, can be handled if you build with some of the things that we have discussed, right? So you build your systems, manage your trade-offs. Third parties are a big risk to you. How do you handle them efficiently, both pre-transaction and post-transaction third parties? And they both have different impacts. Some affect the critical path of the transaction, meaning some affect, John's ability to buy Latana, and the other post-transaction processes or infrastructure will affect Latana's ability to continue partnering with you as a payment gateway or as a fintech partner, right? Um, and lastly, resilience is not an accident. It's deliberate. It's an architectural choice that you have to make from day one. I think for me, some of the sweetest moments in Paystack has been, choices that probably were made in 2016, 2017. In 2025, those choices are still helping, and we see them helping. So it's very, very interesting. We didn't have those problems in 2016, but anticipating the fact that, look, this might be a problem, and you build around that, expecting failures, building around it, those are things that would keep your system a lot more resilient. Um, Thank you very much. This was short. I could take any of those one topics, any of those topics themselves, and spend an hour and go very, very deep. But I hope I've been of some help here. But yeah, let's take the questions.
All right, thank you so much, Loknan. So I'll just go straight to the questions. since we're running out of time. And we have two questions so far in the chat. So the first one is, can you expand on PCI DSS and what kinds of businesses and systems can launch without it?
Yeah. PCI DSS is a payment card industry data security standard. It is it's a compliance standard for financial technology companies, not just financial technology companies, but payment processing companies. So particularly those that interact with card data. You should be thinking about PCI DSS in some way, shape, or form. If you are not interacting with card data, and you never plan to interact with card data, then you'll be thinking of something else, a different certification, maybe ISO 27001 or your SOC, Systems and Organizational Controls audit, which is not very common around here, but ISO is the more common one. But yeah, it is largely for PCIDS is largely for those that are handling card data. So transmitting, processing, storing card data, you need PCI DSS. For those that aren't interacting with card data, and I hope you know what I mean by card data, like your Mastercard, those numbers, right? Um, for those that are interacting with those numbers, the PAN and expiry, you need PCI DSS. Those that aren't, you may not need, don't prioritize PCI DSS. If you are going to work with card data in your future, then maybe yes, in the future you are going to have to talk to someone to help you get your PCI DSS certification done. But if you're never going to interact with card data, you might not need. It'll be cool to do that, but it's the point to be. It'll be pointless because what they are looking for in the audit is how are you storing, processing, transmitting card data in a safe environment, right? So if there's no card data to store, transmit, or process, then you might be better off doing something else, a different audit. And not that you shouldn't do anything, do a different audit. Do the ISO audit, which is common in Africa and Nigeria. Yeah.
All right, thank you. Mr. Ladi, hope you got that. If you are processing card data, you need to have PCI DSS. Okay, so the second question, so we move fast. How would you suggest we handle a situation where you receive a success webhook from Paystack and you acknowledge the webhook with status code 200, but then due to system failure on your system, you fail to make the necessary update on your system with the webhook data?
So in this case, the person got a webhook, they acknowledged it. And where did the failure happen? Was it on the gateway system or was it on your system? Because I'm sure they sent. Sorry.
Said, but then due to system failure on your systems, I'm assuming Paystack here.
Uh, um, that's very, very interesting. Shouldn't there be an endpoint? Now, I'm not sure what the endpoints are in this case. And I don't know what the failure could have been. This is a very, very particular situation. But there could be an endpoint for you to actually request the data or the webhook for that particular event. Or you can basically requery. So we have endpoints for the transaction, and we have endpoints for transactions and endpoints for requerying or checking the status of transactions, verifying the state of transactions, as well as verifying the status of disbursements. So you can use any of those endpoints to check on the data. Yeah. So basically handle it rather as not asynchronously, but just make a call to Paystack and get your data back. Yeah.
Okay. So next question from Franklin. How do you handle a situation where you have to charge differently for an international card and a local card? How would you know the location of a card?
Yeah. So you when you're building one of the services that you might want to use early on is a service that actually helps you do a bin lookup. There's something called the bin. The bin is an identifier for the issue of the card. So all banks have bins, and then doing a bin lookup will tell you, oh, this card is from this region, or this card is from that region, right? So that is something that could help. There are different bin lookup providers with different levels of accuracy, but that would be your best bet to at least start with.
Okay, thank you. So we have another question. What are the trade-offs one should consider when deciding on database for a fintech platform?
Um, some would say that you want to ensure you have ACID compliant databases. Um, uh, but I think it might be slightly more than that. I will start from what are you doing? What type of data are you handling? Because if your data is, let me put it this way, you're trying to make transactions. Someone must make a transaction and someone needs the data, the response right there. And someone wants to be able to see a minute later on their dashboard that that transaction went through. Then we're talking about, you see how we're talking about consistency across the system. On my example earlier, maybe Betty is in Nigeria and Elizabeth is in Jamaica. They want to see the data even in real time on their dashboards. So consistency is something that will be very important for you. So we're looking for a database that has pretty much better consistency. In contrast, um, if Betty, sorry, I'm using Betty and Elizabeth so much. They're the first two I'm seeing on my screen. But Betty and Elizabeth are in two different places, Nigeria and Jamaica, and they both open Netflix, right? No one cares that the first thing Betty sees is what is on Netflix now. Let's say Simpsons. Sorry, I don't really have it. Well, yeah, I have Netflix, but let's move on. If Betty sees Simpsons and then Elizabeth sees what's this thing? Killing a monkey. I forgot the name. Something about killing. Yeah, how to kill a monkey, right? No one cares that they see different content. So at that point in time, eventual consistency might be something that will work for them, which will inform the choice of databases that you would use for that kind of platform, as against the choice of database you use for a fintech platform where the data has to be consistent in both cases, right? So those are the things that I would look out for. It's beyond just saying MySQL or Mongo. It's beyond just saying Postgres or Elasticsearch. It is what are you trying to achieve first, then that would inform the choice of database. And there are ways, sometimes, even if you pick a database that is eventually consistent, you could build the consistency on the application layer, which is a lot more work for you, but these things can be done. So all you just need to do is constantly think of the trade-offs. There are pros and cons for every architectural decision that you're making. Can you live with the cons? And if the answer is yes for you versus the cons of the other one, then go with it. That's what I think.
Okay, thank you. So before we take our last question, Elizabeth has dropped a link in the chat. Please, would like you to write your feedback so far, what you think about the session, and just basically appreciate Loknan for us. Thank you. So the link is there already. It's on our Twitter profile. So I know we have so much questions, but there's only so much that we can take right now. So Loknan, the last question. So someone is asking if there are initiatives, right? Does Paystack organize initiatives that help train the tech community in Nigeria? Anything that they could basically join to help them improve their skills? So are there initiatives available that you can point us to?
I don't have initiatives I can point you to right now, but Paystack occasionally has. So we have a DevRel team, developer relations team that they've organized programs, both for front end, for back end, for developers across board, right? Like whatever you're building, right? So we have these programs happen. We have programs from even our design teams. So just be on the lookout. I don't know that there's any right now in the horizon. I don't know. I'm not I don't organize these programs myself, right? But Paystack does have these programs happen occasionally. Paystack also has there's a program that we have called Future Stacks. So basically, this is us going into communities, getting very new or green um, people. By green, I mean people that are new in technology, bringing them in, training them, um, and they stand a chance of or they have a shot of joining Paystack after a particular time. But the core part of it is that they are trained by our engineers, and they are trained by, designers and engineering managers interact with them, etc., those sort of things. At least just to give them some real world, um, um, understanding of things that happen in a company like Paystack. So yeah, those programs happen. Programs are still run. We have batches that we run. So yeah, I'm sure these things are posted in the community. Yeah. So
Okay. All right. Thank you so much. I know we have so many other questions, but unfortunately, we can't take any more. All right. So we've come to, no, we've not come to the end, but yeah, at this moment, please let's take a moment to appreciate Loknan for this very insightful session, right? I know that we've all learned so many things at this point. Amarachi, sorry, we can't take any more questions. So if you have a concern, please drop it in the chat. Yes, so let's appreciate Loknan. You can also drop your comments using the Twitter link, the link I have sent. Loknan, thank you so much for your time and coming to share your knowledge with us. We really, really appreciate it. Thank you so much, everyone, and have a lovely weekend. Enjoy.